All right, here we go. So thank you everyone for joining us today. I am joined by Marie and Sean. We are going to navigate through some of the financial updates that you should know about right now. But before we jump into some full introductions, I want to get to know you guys better. So I've got a quick little poll. And basically, I just want to know what industry you're coming from. So gymnastics, dance, childcare, swim, music, cheer, the arts, other. Some of you are multi-sports centers out there. And then also, what is your primary role for your youth activity center? So owner, manager, bookkeeper, all of the hats above. We just want to know who we're speaking to today. So I'm going to give that a few more seconds so that everyone can answer the chat. Or sorry, answer the poll. Got quite a few gymnastics and dance people so far, with a close follow-up by swim. And lots of owners and all of the above. I imagine a lot of you wear multiple hats. So almost done, a few more seconds. All right, so kept strong with gymnastic and dance, and then we've got quite a few swim, and then lots of owners, a few managers and bookkeepers, and then a lot of people that are a little bit of everything. So again, thank you for joining us. I am Amber Smith. I am the client marketing specialist here at Jackrabbit, and I get to help you learn ways to make your life easier. And I am here with my teammate, Marie Baldwin, and she gets to do some of the same. So we're going to be here in support of the star of the show, Mr. Sean Deaver himself. And he is a CPA and founder of Express Payroll. And he always brings such great knowledge when it comes to any kind of financial updates that are going on, especially over the last year with COVID-19 and even as we get into the new administration. So without further ado, I am going to pass it over to Sean.
Okay. I'm going to go into presentation mode. So just let me confirm for me that you could see my paycheck protection screen.
Perfect.
And sound check's okay?
Yep, sounds good.
Perfect. All right. Well, welcome everyone. Thank you very much for joining. And always great to be here with my friends at Jackrabbit. And also I know many of our clients from payroll and the tax side are also on the call. So welcome and thanks for spending an hour with me. Today we're going to cover a few things that are hot off the press that are, in some change. And as you know, if you've listened to anything over the last year, whatever I tell you will probably be obsolete by tomorrow. So with all the constant changes that have been going on, things are just, ever changing. So I'll tell you how they look today, but I think there's a lot of important, valuable information in here. We'll get to it, and there's time for questions, but certainly, and Amber, I'll ask if you're still listening. If anything comes in that you think is relevant, please don't hesitate to stop me right then and there and just pose a question. I'm happy to keep it interactive.
Perfect.
With that being said, for those of you that don't know who I am or maybe haven't been on one of our presentations before, my name's Sean Deaver. I'm a CPA and financial planner. I own my own firm. We specialize in the gymnastics, dance, swim, music, theater type industries that are very similar to the ones that Jackrabbit services. And we are the largest professional service firm in the United States servicing those clients. We service well over 1,000 clients throughout the United States. So the information I'm going to bring to you is very relevant and pertinent and customized to you specifically. Obviously, during the pandemic, many of us were all impacted, and most of my clients, if not all of them, were certainly impacted. I think, as some of the slides will show, maybe not at the end of the day, it wasn't as negative as we thought, but certainly being closed and so on, took a toll on all of us. In addition, I am the owner of Express Payroll. We are a partner with Jackrabbit. We provide payroll services to small business owners only in the United States. Very thankful for that relationship. And again, a lot of the things I'll be talking about today do pertain to payroll. Now, something that I just want to bring for those that are clients or are not, there are, I wear two hats. I wear a CPA hat and I wear a payroll hat. And a lot of times people know that, and they ask me questions that are CPA related and not payroll related. So sometimes you need to understand who you're. Now, fortunately, we can service both. Other places that maybe you're getting your services from, sometimes they can't. But there are times if you're a payroll client only, we can only answer to a certain degree. We can't step over that line, if you will. But the reason I mention that is today I'm coming to you as a CPA provider, not at a payroll provider. So I'm able to give you the information. But if you do have follow-up questions, and you want to email me directly or call me or affirm whatever, just understand there are some things I can answer and some things I can't. But I just want to make sure I cleared the air with that. And then also, I do know one of the questions that came in, and probably the question that everybody's asking. I am a Tom Brady fan. I'm from New England. I'm from Boston. And although he's left us and went down to Tampa Bay, because I think that was the first question we saw come through the pipeline, is Sean rooting for Tommy? And I am. He's a close friend, so he'll get my vote all the time.
Go Bucks is what I'm hearing.
Right. Yeah, go Bucks. All right. So now moving on to less exciting things than football, but we will talk a little bit of the agenda today. This will be an agenda that we'll talk about the PPP first round. There were some updates that took place in January that I think are very important. We'll talk a little about the second round of PPP. That one, I think people understand it. A year ago this time, or 10 months ago this time, I was doing webinars on a daily basis just because it was new and people didn't understand it. How's it going to work? About forgiveness. I think most of us have probably, unless you've literally lived under a rock, that's under a rock, that's under a rock, you probably have some knowledge on PPP and how things work and so on. So I'm not going to spend too much time on the technicalities. I will just give high level. And then I'm going to talk a little about the employee retention credit, and then also some of the Family First Coronavirus Act stuff that was extended. All right. So with that being said, let's talk a little bit about some revisions that took place. Those of you that are aware, in 2020 is when we first started seeing these payroll tax credits and PPP paycheck protection and so on. And and there were a lot of rules and regulations. And as time went on and as things started to firm up, the rules changed. Many of us probably can remember when you got the money, you had to hire people back immediately. You had to use the money in 8 weeks. And by the time the program was over, you had to use 75% on your payroll and 25% on other items. And by the time the program was, finished or halfway through, things changed considerably. It went from 8 weeks to 24 weeks. It went from 75% to down to only spending 60%. In some instances, we got harder hit where you were allowed to spend money on rent. And they made a modification that if you own the building, well, then you could no longer use rent. You had to hire everyone back. Well, then they had safe harbors where you didn't have to hire everyone back. So there was a ton of revisions that took place. But some of the ones I think that, most people, again, ultimately settled, and most people have gone through the forgiveness process. But some things that are important are the revision to the terms of the PPP. And I'll cover some of those in the next slides. They also have reopened the PPP for new borrowers. So there's a second round. This second round that they're releasing now is to serve two purposes. Number one, a second draw PPP opportunity, but also those that maybe didn't get PPP originally, you can make a shot at the first draw. This new $900 billion stimulus package that was just signed a month ago, or I should say a few weeks ago, included $284 billion in funding for new loans. The program initially started to focused on servicing underserved communities and minorities, veteran organizations, and women-owned businesses. So they delayed the start of the second round PPP for a few days to service those industries, but then they did launch and open the PPP round 2 for everyone. Now, with that being said, I also want to just mention, because some of you might be sitting there saying, wait a minute, I haven't applied yet. The way this rollout took place is the first few days, there was the focus on these underserved communities. And then they moved to local and regional banks for a few weeks, and some of the larger institutions had to sit on the sidelines. But now the program is opened for everyone. So all people can participate, and even the larger institutions have now been able to jump back into the program. Okay, and the money will continue until it runs out. So now some Economic Aid Act changes that took place, as I alluded to in the previous slide, I want to make sure I address, because these are pretty important and for everyone. So first and foremost, there was a discussion of the tax treatment associated with these particular programs. And initially, they were supposed to be considered not income, and that was wonderful. But then the IRS came out and said, we're not going to declare it income, but we are going to make you consider it an expense reduction. We're not going to give you credit for deductions that someone else has paid for. So that basically, in a roundabout way, makes it appear as if it's income on your financials. Well, then in early January, they changed the rules again. And now they've said, not only is it not going to be income, but you also can claim the deductions for the expenses. So now you're truly getting a double dipped benefit, if you will. Now, we've advised all of our clients, and I'm advising you as well. This does need to be on your financials. You cannot just remove it. I had a client do that. I'm not even sure how it's possible, but they've removed it from their books. You cannot remove it. This should have been set up as a loan originally, and now it should be a credit or an offset in your profit and loss statement. The accounting firm, the CPA firm, will then take that and make an adjustment on your tax return. But your financials, the profit and loss statements and the balance sheet that you have by the end, when you file your tax return, should look very different from what the tax return shows. So you're supposed to account for it in your books as a financial offset, an expense offset, but on your tax return is where the adjustment will be made to give you credit for the deductions that are being taken. Okay, if you're unclear on that or uncertain, please reach out to your CPA firms immediately or your bookkeeping firms immediately. We want to ensure that it's handled correctly.
Hey, Sean, I've got a couple questions that have come in.
Go for it.
All right, so this one is from Allegro Arts. I thought the idle was forgivably up to 10,000. Is this true? I can't see the statement on the SBA site. I only have part-time employees now. Can I still apply for PPP?
That's my next bullet.
Okay.
So why don't I address this slide and then let's hit those questions.
Perfect.
The next bullet here is the idle advance. Now, the idle advance was money that you got back in the March and April timeframe. Most of us are familiar with the total of $10,000. This was money that was given to us as an advance on the idle loan. Some people, it was supposed to be 10,000, and then it changed to 1,000 per employee. Now this $10,000, so a lot of us I'm going to refer to it as $10,000 because that was the cap. This money, when you applied for your PPP forgiveness, the deal was if you got idle advance and PPP, that you had to pay the idle advance back. Well, then in January, they changed the rules again at the same time. And they said, just kidding. If you got the idle advance, that is also now forgivable. So if you have already been through the application process and your PPP was forgiven and your idle was not, don't worry. The SBA or your bank is going to reach out to you and they are going to say, we made a mistake, the rules have changed, and you no longer have to pay that advance back. Okay, so the PPP will be forgivable. We're assuming it's be forgivable. It will be an expense reduction. You will not pay tax on it. The idle advance will be forgivable. However, it is considered other income. So you will pay tax on that. In addition, any other grant money that you may have received from your state, from a local vendor, from anything like that should all be considered taxable income. PPP is the only item that has a special tax treatment. Okay, so the idle advance does not affect forgiveness amount. As I mentioned here in my bullets previously, any forgiveness received would be reduced by that amount. That is no longer the case. The SBA is not reducing it. It will reimburse any PPP borrowers whose forgiveness has previously been reduced. And then lastly, before I let you hit those questions, Amber, the idle loan. Now, this is not the advance, this is the loans. Some of us got, way more money than 10 grand. Maybe we got 50 grand or 100 grand or 150 grand. Some people maybe even $500,000. This is a loan, has no impact on the P&L. It's balance sheet only. And this is something that you'll have to pay back over 30 years at 3.75% interest. And just note that if you do have the idle loan, there were several restrictions that you have to follow. For example, you cannot refinance debt. You cannot take on new debt. You cannot build or move your location. You cannot take distributions or draws in certain cases. So if you do have the idle loan, please make sure you're checking with your professional advisor on what you can and cannot use that money for. All right, Amber, hit me.
All right, do you want me to repeat that first question?
Yeah, go for it.
Okay. I thought that the idle was forgivably up to 10,000. Is this true? I can't see the statement on the SBA site.
It is forgivable up to 10,000. Now it's this is the idle advance is forgivable up to 10,000. That I don't want to confuse someone by saying the idle loan is never forgivable. You will have to pay every penny of it back plus interest. So I want to make sure I just make a very clear distinction that it will not be the first 10,000 of your loan. These were two separate transactions. One is an advance and one is a full loan. The advance is forgivable and it's a grant. You do not have to pay it back. You declare it as other income.
Okay, and there's a couple people asking, are the forgivable idle advances still available?
The forgivable idle advances are not still they're still not. The idle loan is still available in certain instances, but the advance is gone.
Okay. So that answers that one. And I can hear you fine, but there's a couple people wanting to know if you could speak a little louder.
I will do. Is this better?
I think so.
I will talk louder.
There we go. Maybe we just need you closer to your computer. So another question, I got the idle, but no PPP. I assume it would be forgivable too?
Yes, it is. And you may now apply for PPP. Certainly I would, again, if you meet the eligibility requirements, which I will discuss, you can certainly apply now and you could be considered a first round PPPer, not a second round PPPer.
Okay. I'm going to save the PPP questions for when we jump into that more. But another question on the idle loan, the payments are due starting June 2021. However, are they charging us interest from when we got the funds?
Yes, interest always starts from the day you get the money. It does not start when you start making payments. So the interest has been accruing behind your back.
Fun stuff. Okay. Let's see. Oh, a couple more came in.
I'll move to the next one and then you.
Okay. And then we'll go back to some more.
Yeah, we'll go back to some of those.
Perfect.
All right. So some of the other changes that took place now this is with the new, this is with the program changes. So you could use your covered period, if you remember, was 8 weeks. And then it moved to either 8 or 24 weeks. The new program enables you to use between 8 and 24. So you can do any length of time that you would like. You don't have to use it for the full 24 weeks. You could get your money and it has your option on how you're going to use that money. And you may say to yourself, well, what's the big deal? Who cares? I'll just pick 24. And at the onset, that might have been a good thought. But when I talk about retention credits later, I'll show you why that's maybe not a good idea. The other thing that came up was the simplified forgiveness. Many of us have heard about this magic $150,000 number. And if you have received less than 150, there was a thought that it would automatically be approved. Many banks are now the new program with 2.0. That is the case. They signed this as part of the act. It will be anything less than 150 will have a simplified forgiveness application, and you have to provide some certifications and a little bit of support, but for the most part, it's going to be fairly simple. Many banks are hopeful that this 150K will be also brought backwards. In other words, we'll have the same threshold for the 1.0 lenders that got PPP originally. That has not yet been officially decided. So at this point, some banks have closed down the portals. They're not accepting applications because they're hopeful that this will take place. Their philosophy is it costs a lot of money to get these things through the application process. And why am I going to spend a couple $1,000s of our time and our costs to approve a $20,000 PPP loan? So it makes sense, but that has not yet been officially signed into the act. So new program 2.0, the 150 threshold exists. It does not yet exist for the original program. Real estate changes. I do want to call attention to this because I know some people were caught off guard. If you follow my Facebook group, I put out some videos regularly when new changes take place, and I did do a pretty big one on this and highlighted it, but I know people still may not have heard it or understood it. So originally during the PPP program, if you were your own tenant, in other words, I own let's say my dance studio, and I also own the building. So I'm not only a dance owner, but I'm also a realtor a real estate owner. If I paid rent to myself, as long as there was a contract in place and as long as it was not any different than I had paid previously, the original PPP program said you could take that rent expense. Well, then in the 11th hour, or maybe it was like the 10th hour, they came out and they said, unfortunately, if you own the building, we're not going to allow you to take that as a PPP expense. It's not considered one of the allowable expenses. The only time you can do that is if you have a loan with a bank. You're allowed to declare or submit for PPP forgiveness the interest expense only. So again, if you own your own building, you're not allowed to use the rent payment. Even if you have a mortgage, they don't care. The only thing you're allowed to submit for rent for forgiveness associated with rent is the interest expense that you pay on the building. Let's say if you have a mortgage, that interest expense only. So be aware of that. Okay. The 60/40, many of you knew that, and this continues to be the case. 60% of everything you get has to be spent on payroll to be forgiven, and the remaining 40% is what we refer to as additional qualified expenses. Those in the original program consisted of rent and utilities. Now they have additional qualified expenses, and I do have a slide a little later that goes through a little details, but the same rent and utilities are available, but they've offered additional costs to be associated with that. But again, it is still a 60/40 split. So at a minimum. So in other words, if you spend, there was some confusion on this. So let me make sure I'm clear. If you received $100,000, you need to spend 60 grand at a minimum on payroll. You could spend 100, but you have to spend a minimum of 60. And if you spend the 60, then you get the remaining 40 for these other items. Someone had said to me at one point, I only spent 10% on payroll, but I'm submitting the 40% for the other items. I said, wait a minute. Let's say hypothetically they got 100 grand, they spent 40 on rent, utilities, and 10 on payroll. I said, well, you understand that if you didn't spend the 60, you don't get the 40. And they were shocked. So what wound up happening, and these weren't the real numbers, but they submitted their forgiveness. They got 10 grand in payroll and they only got a couple $1,000s for rent utilities. So you got to make sure that you spend the full 60 to get the 40. If you don't spend 60, then everything's prorated down. So spend the full 60 is the message here. Okay, the second draw, PPP loans. First of all, you must apply for them. They don't just automatically appear in your bank account. There was some confusion there. You must apply. Now you can apply with the same institution. You can apply with a new institution, but you do need to apply. If you received the first round of PPP, then you must have spent all of that money as of now. Doesn't mean that you had to have gotten forgiveness. If you haven't gotten forgiveness, that's okay. You could still apply for 2.0, but you have to have spent the money. They do have additional eligibility requirements, and I will go into this in a later detail. But the first and foremost is you cannot apply if you have more than 300 employees, and that number is a body count. It is not full-time equivalents. It's a body count. If you have 50 people and each of them works 1 hour a week, you still have 50 people. So the count has to be below 300. You also need to show a revenue decline, and I'm going to talk about this later, so hold your questions, but you do need to show a 25% loss in revenue. The maximum loan amount is $2 million. I only have one client that exceeded that. So I think for the most part, most of the folks on the call probably are well with, below that threshold. And again, generally the same terms as the first draw, and it is available until March 31st or until the funds run out. Here are a pictorial view of some differences between the two, the first draw and the second draw. The interest rate is 1% on both. The loan maturity is 2 or 5 years, depends upon when you got the program. There's no collateral needed, no personal guarantee needed. The loan amount is based on payroll costs. It is 2.5 months of your payroll costs. So it's not based on anything other than that. It is a paycheck protection program loan. It is not a profitability loan. It is not a rent loan. It is a paycheck loan. Hence, it's based on payroll costs. The maximum amount you could see originally was 10 million. Now it's 2 million. It's guaranteed by the SBA. It's fully forgivable if you don't screw it up, which I haven't had any clients that have screwed it up, but you see these stories on the 11 o'clock news about some bozo who went out and bought himself a Lamborghini. He should be thrown in jail, and I'm assuming his isn't forgivable. And there is deferral of payments. So that is the loan maturity if you do get into a loan. Okay, some second draw eligibility requirements continued. You must have been in operation as of February 15th, 2020. That is when the pandemic originally was kind of considered to be a pandemic. So if you started your business in March 1st of 2020, that is, hopefully you're still in business, but that was probably a bad time to start business. Not that you knew that, but you would not be qualified for a second loan eligibility. You cannot be permanently closed and you cannot be in bankruptcy. So if for some reason during the last few months things got tight and you decide to close down your business permanently, then you are not eligible. This is for either self-employed people or employees or both. That just depends upon your structure. But again, it's a paycheck protection program. Now, if you're self-employed, obviously the way you make your money, your paycheck is through your business. So that's why it's eligible for self-employed people or employees. I do want to make sure I make this statement. This is not for 1099s. If you have contractors only, you are not eligible for PPP. If you got it, then you got it by mistake, and it's very likely or possible that they will come back and unforgive it. So do not include 1099 or contractor numbers in there because it's likely that you will have to pay that money back. It is for employees only. Contractors have to apply for PPP on their own because they are considered self-employed. So make sure you have employees. The current economic, you do have to certify that your current economic uncertainty makes this loan request necessary to support the ongoing operations. That's just part of the things that you'll certify. Again, if you receive the first draw PPP, then you have to have used the full amount. And there is only one second draw loan available or allowed. So, once that money's depleted, then, that will be the end. At this stage, there's no third PPP that we know of. Moving on to the second round eligibility, a little more details here. They have an additional requirement for second loan draws, in that you must show, again, less than 300 employees, I had said initially, but you have to show a 25% decline in gross revenues in 2020. Now, what you're doing here is you're looking at this. For the most of us, we'll use a calendar quarter. So it can't be 3 months. It's a calendar quarter. So a quarter is January, February, March, or April, May, June, or July, August, September, and so on. And if, like, for example, if I'm using Q2, I might say my April, May, June of 2020 versus my April, May, June of 2019. And I have to show a 25% decline in gross receipts during that period. If I can, I'm eligible. If I can't, then I'm not eligible for the second round. You do need to show reduction in gross receipts. Now, I will define gross receipts on the next slide, but gross revenue. Documentation, loans less than 150,000. You do need, the banks have been asking, in case you haven't applied yet, they are asking to support the revenue reduction. You need to produce like a set of financial statements from QuickBooks or something that, or perhaps a tax return if you're using an annual comparison. But I wrote here, if tax forms are not available, copies of quarterly income statements or bank statements would be suitable. But you do need to prove that you, or at least certify, and in many instances prove that that you have a 25% decline. Okay. Next, what is gross receipts or gross revenue? This is all the income that you make in whatever form. So, if you're a dance school, this is going to be tuition, registration fees, sales of, ballet shoes and leotards. If I had a recital, that would include recital income. If I got a grant or I got a PPP advance, that is other income. That is included in your income. Because if you think about it, the purpose of those grants or those income items was to supplement your income. So hence it is then called income. Your PPP is not income, as I described earlier, so you do not need to include it. But anything else, if you got a town grant or a grant from, anyone, that's all considered income. Needs to be included. As I mentioned here, the amount of any forgiven PPP loan will not be included in gross receipts, but grants and EIDL advances are considered gross receipts and should be included in your P&Ls in the month that you receive them. I'm not going to go into the affiliate comment, but that's essentially how you calculate your 25% reduction. Like the first draw, PPP is based on average monthly payroll. Cash compensation, just like before, is capped at $100,000 per person per year. So you can't, if someone makes $200,000 a year, you can only include the first $100,000 in your request for the loan. And I will say this here, banks have been a little unclear, which is surprising to me, on whether you can use 2019 or 2020 for your average monthly payroll. Now, the reason this is kind of important is, think about an extreme example for a moment. Let's assume in 2020, I had $1 million in payroll and 100 employees. I'm sorry, in 2019, when things were great, I had $1 million in payroll and 100 employees. And now let's say in 2020, I got hit pretty hard and my payroll's only 100,000 and I only have 10 employees. Well, if you use your 2019 figures and take 2.5 months of $1 million, that's a good chunk of money, a lot more money than you can spend in 2020. So be very careful in how you choose your reporting period, because if in my extreme example, if you use your 2019 figures, they are going to ask for a lot of money back when you file for forgiveness. They don't want you all of a sudden ramping up. I mean, if the business is ramping up, then go for it. But you don't want to just, start hiring people that you don't know, or hiring people and giving them work that they can't fill just to spend that money. You want it because you don't want the business to turn around and go back down. So be very careful on how you choose which reporting year you're using. Now, if you said to me, 2019, my payroll was $1 million, and in 2020, my payroll was 950, yeah, it doesn't really matter. Not a big deal. But if you have extremes like that, be very careful, because when you file forgiveness, the last thing you want to do is have to pay any of this money back. And as I mentioned, it's 2.5 times your average monthly payroll, capped at $2 million. There is a scenario where you could get 3.5 times, but you need to be in the food business. So I don't think anybody on the call would likely pertain to that. So I'm not going to spend any time with it. You should know that for the most part, it's 2.5 times your monthly payroll, but there is an exception for certain NICS codes to be 3.5 times. The forgiveness framework is the same. Okay, it will look the same. As I mentioned, they do have that 150 caveat. Forgiveness is provided based on incurring permissible expenses during that covered period. You do have to continue to pay the people that you hire. You have to continue to pay them the wages that they were making before. That's still part of the program. And you have to continue to pay, keep the same number of full-time equivalents. Hopefully, back in 2020, it was different. We had 20 people and we shut our business down. We only hired 5 or 6 or 7 of them back. That was a reduction. Now, hopefully things have changed where you have 5 or 6 employees, and maybe in the next couple of months, you'll be getting up to 7, 8, or 9. So the full-time equivalent thing shouldn't be as big of a deal as it was with the first round. But understand that you do need to continue to maintain the same number of full-time equivalents. The covered period begins the day you receive the money. As I mentioned, you can choose between 8 and 24 weeks, and you have to spend 60% on payroll. The remaining 40 can be on non-payroll costs, and non-payroll costs can include the following: mortgage interest, rent, utilities, operations expenditures, property damage costs, supplier costs, and worker protection expenditures. So that's like PPE. So there are a few more items that you can include. I thought I'd list the new ones for the PPP round 2, not for round 1, but for 2. And again, I think most of us are familiar with this, and most of us will spend it on payroll and rent or utilities. But if you've retrofitted your building, let's say, to include new air cleaning units or something, or you've hung up plastic shields everywhere in the facility, those items are considered worker protection expenditures, and you can use and remit those for reimbursement. Okay, I'm not going to spend any time on this here, but I have the slide, and I know those will be sent out. So if there's any forgiveness is reduced, again, if your full-time equivalents are dropped, it's also forgiven. A forgiveness amount is also reduced if salary and wages are reduced by 25% or more per person. They do have the same safe harbors that they had originally. If you can't rehire or reestablish the same number of comparable employees that you had before, there are some safe harbors. If you've gone through the application process for forgiveness, again, it will look very similar. This terminology should be something you're probably aware of, but I thought I would include that there. This is kind of, again, the process. You have 10 months to apply for forgiveness. Once you've applied, if you haven't already, you'll receive a note from the bank saying, we've agreed and we've passed it on to the SBA. And then the SBA has 5 months to process that and get back to you telling you it's been fully forgiven. I'll tell you myself, I have 2 PPP loans. Both of them have been forgiven fully. And I've heard back from the SBA, and my firm has helped probably over 1,000 clients with their forgiveness loans. And also, I don't know any of them that have not come back yet. So, again, I think most of them are probably going through pretty rapidly. Okay, Amber, I'm going to move from PPP onto other items, but before I did, I thought I would quickly ask if there were other things that people had a question on.
Oh, absolutely. We've got quite a few, so I'll just pick out some of the PPP ones before we move on.
Mhm.
So this one says, my business officially opened for business in August 2020, even though I had labor expenses starting in February to start pre-opening activities. Can I apply for PPP?
No.
All right. If rent is through an affiliated company with the same owner, can you take rent?
No. That was one of the big changes. That is you cannot do it in the first round. You cannot do it in the second round. You can only, even if it's an affiliate, even if it has a different owner, let's say you own 50% and someone else owns 50% of the building. Since that's an affiliated entity, you're only allowed to take interest expense that you pay to the bank, assuming you have a mortgage. If you don't have a mortgage, then you're not allowed to take anything at all.
Next up, I did not use $500 of my PPP to keep the percentages of 60% payroll. Does it make me eligible then because I did not use it completely?
I would no. You would have to, I'm assuming what that means is that you are going to apply for forgiveness and have $500 returned. In that case, as long as the application has been through the process, you can go through with it. What I would probably do, though, is get some extra payroll in there or put an extra utility payment in there. Try to make sure that that's fully absorbed and let them just tell you that it wasn't fully used for the right reason, as opposed to you didn't use it all. That way, you would still be eligible to apply for the second round.
Awesome. We'll do a couple more. With COVID, we had a decrease in our payroll because we've had a decrease in our clients. Does this mean our second loan will be smaller, or will it be the same as the original 2.5 month payroll cost?
The factor of 2.5 months will be the same, but this goes back to the conversation I had, whether it's 2020 versus 2019. So since your business is smaller and you have fewer people and fewer clients, you should likely use the 2020 figures, because those are probably more relevant or comparable to what your current operations looks like. So that's how I would address that.
Okay, and one more. So we have to submit forgiveness first before receiving the second draw of PPP?
No, I said a few times throughout the presentation, you do not have to have submitted yet. You have to have used the money, but you don't need to submit the application as of yet.
Okay.
Cool.
Yep.
All right. So now I'll move on to another program, which is the Employee Retention Tax Credit. This is a pretty important program. And originally, what this does is this provides, it's a fully refundable payroll tax credit designed to encourage owners to retain and compensate employees during the periods in which they're not fully operational. Now, for small business owners, anything less than 500 employees, it's really just if you're paying people, you're eligible for the retention credit. Now, originally, you were not able to use the retention credits if you got PPP. And they've changed again. Early January, they changed the program again, and now you're actually able to apply for both. Now, it's really important because this is a retention tax credit that gets filed on a payroll tax return, and you really need to ensure that this is buckled down and fully supported. Basically, what the program does is it allows you in 2020, it allowed you to take 50% of an employee's payments up to $5,000. So let me give you an example. And this is from March through December. So if I have Amber on my payroll and I pay Amber $5,000 a quarter, in the second, the third, and the fourth quarter, I would have paid Amber $15,000 in total. I'm eligible to take 50% capped at $5,000. So 50% of 15,000 would be 7,500. So that's above the cap. I would be able to take a $5,000 credit on my payroll tax return for the money that I paid to Amber. Now, assuming I didn't get it, if I had 10 employees and I paid them all the same, then that would be 10 employees times $5,000 that I'm able to take as a payroll tax credit. Now, assuming I didn't have PPP, fine, end of story, and that's how we do it. But if you had PPP, then the government said, well, how much of that, in my example, 15,000 did you give to Amber was PPP? And if the amount that I gave to Amber for PPP was 10 of the 15,000, well, then I cannot contribute. And that was on my PPP application. Then I cannot use any of that money for the credit. However, as I mentioned, I paid Amber 15. So I used 10 for PPP. Then I'm able to request the tax credit for the remaining 5, and I would receive a $2,500 credit for Amber in my example. Now, this for 2020, this is going to create a lot of work because a lot of us have submitted our forgiveness. We use 24 weeks. We need to have payroll records to show exactly what was used for PPP and what wasn't. And it may not be worth utilizing the credit, but you can if you feel that if you use, like, for example, in my case, I used all my money in 8 weeks. I was one of the original recipients. So all of my money was done and completed in May of 2020. So for me, I could use and apply for retention credits for the second half of the year for everyone that was still on my payroll. So that's my intention. What I'm going to do, I'm going to go back and I'm going to amend my tax returns so that I can get those credits. Now, that was the 2020 program. In 2021, the program changed, and you're able to get, instead of $5,000 for the year, it's $7,000 per person per quarter, but it's a 70% number. So what does that mean? If I were paying, now let's say I've given Amber a raise because she's such a great employee, I'm now giving her $10,000 a quarter instead of $5,000. And now this goes through the middle of the year, so I'm able to get a credit for $7,000 for the first quarter for Amber and $7,000 for the second quarter. That would be a credit of 14 grand just for Amber, and I can blow it through all of my staff. Now, again, same rules apply. If I'm getting PPP, I'm not able to use it for Amber for the same dollars. So I have to keep track very tightly of what I use for PPP for Amber and what I use and what I don't use, then I can apply for the credit. So this is a really big and important program. There's a lot of money to be had here. And I will tell you what we've done is we have engaged a third-party firm that specializes in employee tax credits. You would not want to just whip up a spreadsheet that had this. The firm that we use creates the forms, they update the 941s, they actually write an opinion letter that goes along with each quarter filed. So if ever audited by the IRS, there's an opinion letter that goes along with it. And if anyone is a client and interested, we would be happy to introduce you to the firm. We don't do it for non-clients because the risk is too great. So you would have to be an Express Payroll client in this case. If you're not a client and you're interested in becoming a client, you would then be eligible. But the credit work is only available to Express Payroll clients because it's kept within our system, and we've produced unique reporting to help with the calculations of that, as well as going backwards if needed. Okay, now I do want to point out the double asterisk at the bottom. An employer is eligible for the credits if the employer's gross receipts are less than 50% of gross receipts for the same calendar quarter in 2019. And effective January 1, 2021, the eligibility for the credits is the gross receipts are less than 80% of gross receipts from the prior year. So you can't just automatically do it. You have to prove, again, that your business was been impacted. These credits, the PPP, the retention credits, and so on, these are for businesses that have been negatively impacted. If you're, I have a client that's a law firm that just is making 3 times as much money as they did last year. They're clearly not going to be eligible for these types of credits. So you do need to show the gross receipts or the reduction of 50% to be eligible for the 2020 credit. And what the 80% means is a 20% reduction would give you eligibility for the credit in 2021, not an 80% reduction, a 20% reduction. Okay, so if your Q1 is going to be 20% lower than Q1 last year, then of course you would be eligible. All right, so I thought I would bring that to everyone's attention. Here is just a high level view. As I mentioned, the original program was from March 13th to the end of the year. The new program is January 1 through June 30. The credit rate was 50% up to $5,000 in 2020. It is now 70% per quarter. So that's how it could be a total of $14,000 in 2021. So that's pretty much how the program works and how the credits are calculated. If you think you have eligibility, please reach out to your professional advisor. Now, this is going to be a CPA question, not a payroll question. So make sure you're reaching out to your CPA firms to help you with that. They're going to be the ones who, are going to have to show you and talk you through whether you're eligible, and then, get on board with helping out how to calculate it. Last bullet I have before I'll open it up to more questions, Amber, is COVID, sick, and family leave. For many of you, you'd heard about the Family First Coronavirus Act. If somebody goes out on leave because they have COVID, or maybe they're caring for someone who has COVID, or for example, if my child's school was closed down and their daycare was closed down and I can't come to work, if they're not able to work from home, there was a program where you could pay them up to 80 hours of emergency sick time, or they could even go on extended family leave. I won't address that one, but I will address the family first, the sick one. So if I had a staff member who worked 20 hours a week for me and he or she was quarantined or had COVID, I could then pay them for those 20 hours, even though they might not be salary people, they might not have vacation benefit. And what could happen is I would get that money reimbursed by the federal government. With that being said, in the event that you've done that, that program continued. It was supposed to expire 12/31. It continued through it'll continue through the first quarter of 2021. And what you could do is continue to get that benefit. The numbers haven't changed. It's still up to 80 hours per employee, but you're still eligible to do that program. Now, I do want to point out that this program is not required. It's an optional program. So you do not need to offer it, but I wanted to make sure people knew it existed. If you're an Express Payroll client, we set this emergency COVID credits up back in March and have been, clients have been able to take advantage of them. Again, a nice way to save some money and keep your people paid and employed. And with that, Amber, I'll open up to questions, and then I'm also going to put up my contact information. If anybody wants to reach out to me, again, my name's Sean Deaver. Here's my CPA firm, Deaver CPA, and my payroll firm is express-payroll.com. And I'll open it up floor for some questions if you have any.
Oh, we have some, but I just want to say before we run through the questions, thank you for presenting this information in an easy to understand way. It's always a highly attended webinar when you're involved, and you put things that are very confusing in an easy to understand way for our clients and our friends in the industry. And on their behalf, I am very appreciative of you.
Well, thank you very much and happy to do so.
And thank you for the raise, by the way.
You got it. Absolutely. You're a great worker.
Okay. So I'm just going to go from top to bottom.
Yeah.
So if the EIDL loan of $50,000, the first $10,000 is forgiven or included as other income that is taxable.
If the EIDL loan of $50,000, so if the EIDL loan is $50,000, then that's just a loan. The advance was something specific and different. The 10 grand, the 10 grand advance would be considered other income. My assumption is the 50,000 is the true EIDL loan, and that is fully payable. You got to pay that whole thing back. So none of that would be considered income.
Okay. Next, so can the owners use other money they earn to buy a new building or take an owner distribution?
I'm assuming, well, I'm not sure the premise of that question. I did allude to the fact that if you received an EIDL loan, that there are some restrictions on how you can use that money. If you do have an EIDL loan, then you are restricted. So that could prevent you from doing both of those things. I'd have to know a little further detail about the company and the setup and how much money it was and so on. Presumably, if you got the EIDL loan, most likely you needed the EIDL loan. So to think that you needed it and now you're taking money to go buy a building or something like that, that's not a need. A need is, oh my God, I can't pay rent. Oh my God, I can't pay payroll. Not, oh my God, I want to buy a new car or a new building. So my assumption would be be very hesitant to say yes to either of those. But without knowing the particulars, I certainly there could be a case where it's possible.
We received a local state CARES Act grant. Does that report as income?
It does. Any grants, the only, I'll say, preferential or special treatment from an accounting perspective that exists is the PPP. Everything else should be considered income. And by the way, I'll point this out as well. In the event that you had an SBA loan, the SBA for many companies, made payments on your behalf this year during the year. So if they were making 6 months of payments on your behalf, those payments that they made are considered debt forgiveness. That is also considered income. So make sure you're talking with your CPA and bookkeepers and professional advisors to ensure that any type of debt that had been forgiven is considered income on your tax return. Great question.
All right. Owners who are also employees, can you count their payroll costs for PPP?
Great question. And it depends what kind of business you are. If you are an S corporation and you have payroll, then yes, if you get a weekly paycheck or a biweekly paycheck or something of, $1,000 then you're considered in the payroll. If you are a sole proprietor or a partnership and you don't draw payroll, and by the way, you shouldn't be, you're not eligible to be on the payroll, then in that case, you have to use a different approach, which is using your tax return profitability to determine if you're eligible to include that. So it is specific by specific. There's very specifics based on your business type. I would check with your CPA and banker as well to ensure that you're getting the maximum credit available.
Okay. Is this tax credit something our accountant does or our payroll company?
Tax, it depends which one you're talking about. I'm assuming you're talking about the employee retention tax credit. It's going to have to be calculated by a tax professional or someone like that. And then you give the information to the payroll provider who's filing the tax returns. Or perhaps if you're amending a prior year, your CPA or accountant could do the amendment. But as a payroll provider, we're not able to take on that liability. We're not able to do the calculations on your behalf. Hence why what we did was we went to an outside firm to use to help us calculate the credits for our clients.
Okay. This one involves Jackrabbit, so I thought this was an interesting one. I got a notice from the SBA that cloud-based software like Jackrabbit expenses could be under allowable expenses for PPP forgiveness. Is that true for the first draw or only the second?
It is true, and it's only for the second rule.
Very interesting. Okay, and we'll hit one more, and then I know that you've got somewhere else to be because Sean is very popular. I don't know if you guys know, but he is very popular. Can you discuss the interplay of PPP and employee retention tax credit? In other words, not allocating any more payroll than necessary in order to maximize the credit.
Yes, so very good pickup there. That is exactly what it is. So if you think about it, as I mentioned in my example, you could get the employee retention credit, but you cannot get that credit for money that you used PPP with. So if you're applying for forgiveness, you might want to keep your forgiveness period to 8 weeks instead of 24, and thus utilize the employee retention credit for the remaining periods. Now, again, you do need to ensure that you can meet the requirements for even being eligible for the retention credit. So you want to ensure that you can do that. There's a lot of math that goes into this, a lot of analysis that goes into this and strategy, but that is something that the two are interwoven, if you will, where you cannot use the same dollar for both programs, but you can use payroll for both programs. So you do need to ensure, again, in my simple example, if you used PPP and you used it all in the first quarter, then you would have the second quarter that you could use for striking those employee retention credits. So a great question and something to strategize for those of you that are getting your money now. You might want to strategize with your CPA and professional advisor on how you're going to best deploy that so that you can take advantage of both programs.
All right. Well, sorry we didn't get to every single question, but Sean was able to share a lot with us, and he's got his contact information up here if you decide that you want to reach out to him for further information. So we will send this out tomorrow, and thank you everybody for joining us. Have a great day.
Thanks to everyone.
Bye.